Another day to do business. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations right here on Channels Television. Of course, the program is Business Morning, and I am Ini John Mekwa. And we start off what we do as usual, but today we're starting from how the market closed at the end of trade yesterday. So we see a slightly positive market is what the Nigeria equities market closed with. A safe place, but we could do better. 166,267.60 points. That's what the L share closed with after it gained slightly at 0.01%. The equities cap added almost 7 billion at the close of trade, 6.88 billion, and sustained the 106 trillion naira level for there. Let's see the drivers of these numbers. At this time, volume activity chart yesterday was green, all of them, compared, of course, to the previous day. They were in green, especially deals. We saw that the day before, the deals were in the negative, but yesterday it closed in the positive. Value, 24.93 billion, and volume, 822.73 billion in volume of trade yesterday. See other parts of the market. For the close of yesterday, the top gainers there, NCR has found its way back there. It's been really popular for, I think, about 3 weeks now. We've seen NCR, LT Briscoe, and McNichols also made it to the top trades. On the flip side, we have UPD Credit and Champion and NSL Tech. NSL Tech has gathered a lot of gains, so investors decided to take some of that. Top trades yesterday, Zikis and NSL Trade, as well as Accessco again. Accessco, of course, shed off a lot of profit and so has become more attractive to investors. And going to the global oil space now, prices edged up on Thursday after United States President stepped back from the threat to impose tariffs in his effort to seize Greenland, reducing the risk of a U.S.-Europe trade war and supporting the global economy and oil demand. So we see price this morning looking good. In the green, 0.15% is what Brent has added in a couple of hours after that speech by President, especially when he went back to his Truth Social to counter some of the things he said, at least by sentiment. Nothing concrete yet. $65.34 a barrel for Brent and $60.76 a barrel for WTI. It's rare to see WTI at $60, but that's what it's come to at the end of this. The contracts had climbed on Tuesday more than 1.5% and more than 0.4% yesterday because of Kazakhstan. We know they halted output at 2 of their major oil fields, I believe the biggest in the world. And also another major mover of the market is an agreement on Greenland that would reduce downside risks from a U.S.-Europe trade war and is supportive of the global economy and demand for oil. Of course, these are those drivers for the sector. All right, let's talk about the oil and gas sector a little bit more at this time with Dr. Eva Umeozo. Is a founder of Proctem and joins us from our Abuja studio. Okay, I believe we have him in a bit. First of all, let's see a story that Ladi brought to us yesterday. The Central Bank of Nigeria, they're asking banks and payment service providers to strengthen their fraud-fighting systems and to also commit to measurable reductions in the electronic fraud, including responding to suspicious transactions within 30 minutes under the Nigeria Electronic Fraud Forum framework. That's conversation was yesterday. They were speaking at the NEFF technical kick-off session. The CBN officials highlighted a significant drop in fraud losses for the year 2025, and they stressed the need for real-time monitoring, better identity verification, and deeper industry collaboration to protect the country's digital financial system. Let's see what's happening in Switzerland, the latest meetings that were held yesterday. last many sessions held yesterday, most of them always center around trade. And one had the Director General of the World Trade Organization, our very own Dr. Ngozi Okonjo-Iweala. She was a part of a session that talked about the impact of tariffs, potential impacts, already felt impact, and what could happen, especially as President Donald Trump continues to threaten the world with even more tariffs, either for the Greenland or just for the relationship between the United States and Europe.
Trade-enabled infrastructure shifting, and particularly what role...
In yet another session, Europe was at the center of it, and the session, how can we unlock new sources of growth? There we had the president of the European Central Bank, Ms. Christine Lagarde, sharing the approach which they have adopted in Europe, that's the 27 countries, and they emphasize better communication for the understanding of what's going on by government of the bloc.
We try to assess whether we are understood, whether the business that we conduct is appreciated or not, but particularly that whether the Europeans see the value of the central bank. And surprisingly so, more than 60% of in all European countries of the European Union appreciate, understand, value the work that is done by the ECB. This is work that we have done together with a survey of whether the euro itself as a currency is valued or not. And on that front, we have an even better result because 82% of Europeans actually value the euro and see it as a common denominator for them. The second thing that I want to mention, and we've done a lot of work for the last 6 years on that front, is try to simplify the words that we use to communicate. I'm not the only one to have tried that. Jay Powell actually had tried it, and he had tried to do the sort of dual usage communication, talking jargon with the experts, the Fed watchers and the analysts and all that, and a more common language with the general public. And he told me, he said, that was difficult, didn't work out, and obviously the watchers were watching what he was saying in plain words, and the plain words did not exactly carry what the technical jargon was explaining, and so you eventually had inconsistencies and risk of conflict of understanding. So what we do is we measure the difficulty of understanding what we say, particularly in the monetary policy statement that we issue in my press conference whenever we have a monetary policy decision. And we are actually performing quite well on that front, because the difficulty of the language and the level of education required to understand what I say or what is in the monetary policy statement is significantly lower than the level of education required to understand what the Fed is saying.
And still at the session yesterday, the biggest one, I believe, was President Donald Trump. And of course, the Greenland issue. But other than that, President Trump can make you get angry and laugh at both the same time. Yeah, but I mean, we have a little bit of what he said about Greenland because we saw reaction in the market, even though later on his Truth Social, he now said something else. But first of all, let's listen to a bit of the over 1 hour speech by President Donald Trump at Davos World Economic Forum.
But every NATO ally has an obligation to be able to defend their own territory. And the fact is, no nation or group of nations is in any position to be able to secure Greenland other than the United States. We're a great power, much greater than people even understand. I think they found that out 2 weeks ago in Venezuela. We saw this in World War II, when Denmark fell to Germany after just 6 hours of fighting and was totally unable to defend either itself or Greenland. So the United States was then compelled, we did it, we felt an obligation to do it, to send our own forces to hold the Greenland territory, and hold it we did at great cost and expense. They didn't have a chance of getting on it, and they tried. Denmark knows that. We literally set up bases on Greenland for Denmark. We fought for Denmark. We weren't fighting for anyone else. We were fighting to save it for Denmark. Big, beautiful piece of ice. It's hard to call it land. It's a big piece of ice. But we saved Greenland and successfully prevented our enemies from gaining a foothold in our hemisphere. So we did it for ourselves also. And then after the war, which we won it big. Without us, right now you'd all be speaking German and a little Japanese, perhaps. After the war, we gave Greenland back to Denmark. How stupid were we to do that?
As President Trump regretting that the United States gave back Greenland to Denmark, saying that they were stupid for doing that. And he actually used the word stupid quite a number of times yesterday. I think his predecessor suffered it the most, President Trump. But, I mean, we have here in the studio Duma Bioluwale to help us. Duma, I don't know if you listened to President Trump yesterday, but, I mean, I think 1 minute... And when he wanted to start talking about Greenland, it was like, do you want me to talk about Greenland? Oh, I didn't want to talk about Greenland. I'm like, well, you know the reason you're here is because of Greenland and everything. But the market had one way of reaction after that. But then he went to his Truth Social and said that he had reached a preliminary understanding on Greenland after talks with NATO Secretary General Mark Rutte, a move he claims has eased tensions. And we did see that in the market, oil market numbers this morning. But there are other markets other than oil, even though oil seems to be the biggest. Yes.
I mean, at this point, it's very clear that VUCA is still a very prominent thing happening across the global markets. And by VUCA, I mean volatility, uncertainty, ambiguity, and complexity. So we're at that point where there's a lot more uncertainty around the global economic environment and what is likely to happen. In fact, what we are seeing right now is more scenario-based, analysis across the board of what could likely happen. In fact, yesterday I saw an article about the uncertainty of uncertainty. So right now it's an art to understand how to navigate uncertainty because of the current global environment that we're in. But speaking about the U.S. Greenland issue and how Trump and then the current update on it, what we have seen is not so much as a 360-degree change, but more of like a 180-degree pullback on what was likely to be the case. So we have moved from a conversation of brute force on the takeover of Greenland to now, we're trying to maintain some level of sanity around the entire process. In fact, in quote, it was called a framework of an understanding between the NATO Secretary General and Trump. Now, what that means for the global economy and markets in general is multi-pronged. And when we start with the fact that, okay, with the current update that we have right now, what we're likely to see is, first of all, the conversations around a breakaway of the NATO alliance is now unlikely. So, which means that especially because of the tariffs that the Trump said they were going to issue on European countries that were not going to be in support, or they were not in support of the Greenland takeover. So that tariff, right, in conversation has been dumped. So that means that there's some level of respite in that regard.
But I wonder, Dumebi, if we can actually say that, President Trump, he can wake up on another side of the bed and have another idea and then think, because nothing is concrete yet. Nothing is written, nothing is agreed or signed yet. So anything can still happen. Yeah, while that is true, I think it's extremely important for us to kind of contextualize how important it is for that alliance to remain in place. The U.S. is not living in isolation when it comes to the NATO alliance, right? As much as the U.S., as much as Europe is benefiting from, U.S. support in terms of security and defense, it's not so far-fetched that there's some level
level of supporters who are coming from European countries for the US, right? So it's a mutual beneficial agreement, or we'll say relationship, that the broader global environment will benefit if it remains intact. And I think that that would be the focus of keeping that alliance intact. Now, whether or not there will still be conversations around the Greenland takeover or no Greenland takeover, I think the core of what is likely to be, which was because we're coming from a world where there were questions around the NATO alliance actually probably, dissolving. And now the question now is, most likely this is not going to be the case, at least for now. Who knows? Tomorrow that conversation might coming. But I think that at the core of it all, on a global level, it benefits all parties that the alliance remains intact on a security level, on a defense level, on a trade level, right? And I think that that would be the focus for the NATO Secretary General and even for the United States. I think the other thing to note here is how important Greenland is in the Arctic region, and why this conversation is even happening, right? We're now living in a world where rare earth materials or rare earth minerals have become very prominent for the transition of the global economy, right? From renewable energy to the electric vehicles. And remember that Europe and US and even the United Kingdom are very big on renewable energy, climate finance, climate change, and all of that. And Greenland right now is somewhat a hub for a lot of the materials and minerals that are needed to sustain this drive and this push on a global level, right? From copper to uranium. And remember, uranium is very useful for defense materials, right? So when you think about what is happening within the US and Europe and Russia and China, you realize how strategic Greenland is for them to sustain the momentum against their against Russia and China, to maintain the trade, will I say trade war, or pushback against both countries.
So what's happening, all of this, how does it impact the rest of the world, especially emerging economies?
Yes, so I will start off with factor number one. As interesting as this situation is and how somewhat bearish it might look, it actually points to the fact that there is strong demand for these rare earth minerals. And it means that there's an opportunity for emerging markets to open up their markets.
Because they have a lot of resources.
Resources, exactly. So even in Africa here, we see how, giving the example of DRC, for instance, with DRC in 2025 putting a ban on cobalt exports, we saw how significant that impacted the global market, right? And that tells you how much there is demand for these commodities or these resources, and how much more emerging markets and frontier markets can prepare themselves to benefit from this global demand, or this surge in global demand. Then you also consider the fact that there is the BRICS, right? And how this issue would likely give more strength to that bloc. From Russia to China, right? You see that there is an increase in focus of these two markets towards emerging and frontier markets. We're seeing a lot more memorandum of understandings happening between Russia and China across emerging markets, even smaller Francophone African countries. We're seeing them, really come up to support and provide a lot of...
And Egypt seems to be receiving a whole lot of attention.
Yes, because of how strategic they are.
Yes,
for global
trade. A lot
of
MOU, a lot of grants and agreements coming the way of Egypt.
And the expectation is that it's going to likely continue, right? And what this just tells us pretty much is how that, number one, like I said, there's an opportunity for emerging markets to take place. But more importantly is what this now looks like for trade and investment between Russia and China in emerging and frontier markets. The expectation is that that is going to increase. So what we'd likely see is more of a trade-like competition or competitiveness between the Western world and Russia and China for Africa or emerging markets. Those are two things that would likely increase. One last thing to mention is the fact that the upsurge on safe haven assets would likely continue. So we've seen gold prices rise.
We've seen gold, copper, silver,
and the expectation
hit record highs.
The expectation is that that's also going to continue. More importantly, because there is that demand, and then all of the uncertainty is pushing investors towards
why are they not pushing investors to crypto?
Well, there's still, while the world is adopting digital currency, we're in that age, truth be told is that investors, a lot of times, traditional investors and countries like to deal with what is physical, right? And that's the way I would put it. What they like to deal with what is physical in terms of currency, assets, things that they can quantify, right? Not because there is not demand for that or investors are not actually putting that, but the thing is there's a lot of volatility in that space, a lot of understanding that still needs to go on there,
yeah.
right? And so investors would rather do what they know
with their
right,
money.
With their money. And even when you look at the portfolio, not because they're not investing, but a larger share of their investment goes to from fixed income. Then you now go to safe haven assets, and then you go to crypto.
All right, Dumebi, thank you so much for helping us understand President Trump more.
Thank you for having me.
Yeah, Dumebi Oluwole is the manager at a financial derivatives company, and of course, talking to us about what happened or some of the consequences we can expect on the conversations going on at the World Economic Forum. Dr. Eva Omeozo, founder of Proctem, joins us from our Abuja studio to help us look at what has been happening in our oil and gas, a little bit of it because it's really wide, and then let's see what to expect with all of these disruptions going on. What can Nigeria expect in 2026? Dr. Omeozo, good morning and welcome to the program.
Good morning, Nini.
Great. So let me just do a bit of recap of what we know that happened in the oil and gas sector for 2025. We saw that crude oil and condensate production average was at 1.64 million barrels per day for most of the year, but that saw an increase. That indicated an increase from what we had in the previous year, 2024. Benchmark target production about 1.8 and 2.6. Of course, we know we didn't meet that for last year, but we saw a lot of rig counts being introduced. By late 2025, we had seen a significant growth. An estimate was about 17 to 18 active ones. We also had the NNPCL asset divestment program. And I think this has even spilled over to 2026, the bid round, to reinforce the lost decade, which Nigeria did not conduct a bid round for 15 years. And reports believe that led to the low production that we've had. And now that we have more active rigs, perhaps that would help. But from your perspective as a player in the field, in the oil and gas sector, how would you describe 2025, and what are the factors that will spill over to the outlook of 2026?
Thank you for the opportunity to share my ideas and opinion concerning the industry in the last year and also looking forward in the current year. I think in the last year, Nigeria has made significant progress in terms of our ability to grow production and minimize disruption of supplies, especially with regards to tapping of crude from the pipeline that had characterized the upstream sector in Nigeria in the past couple of years. So that has boosted investment confidence, like for various, both local and international, for which reason I think is part of the reasons that we see that NUPRIC conducting the current bid rounds and the interest that it has generated. We have also seen the transparency that the current dispensation has introduced in the process of attracting such investments. I think the hope is that the current rounds will lead to potentially about $10 billion of investment that can be unlocked across all the various terrains, from onshore to deep offshore and shallow and frontier terrains. But with regards to Nigeria, we have seen, we've seen the production grow up to 1.6 million barrels per day. And until recently, we have been seeing certain sentiments about supply, especially with what happened recently in Venezuela, which kind of triggered sentiments that would have significant volumes coming into the market, potentially contributing to recent depression in the prices. I believe that this is like temporary effect, considering that the volumes that are expected to come from maybe potentially from Venezuela into the market would be quite. It's not the type of crude, for instance, in the first instance is not the volume. It constitutes just about 10% of the total global supply. So you're talking about the heavy sour crude, which just about 10% of total global supply, of which you have about 100 million barrels per day that comes into the market. So I think it's just a temporary disruption that will rebalance over time. With regards to Nigeria, I think the expectation is that the new licensing round will attract investment and would see continual increment in terms of our ability to enrich the reserve base and also support additional supply in the market, particularly now that we have a lot of off-takers potentially here. You have the Dangote refinery, you have other refineries that are coming, potentially domestic demand for the crude itself, and which can be accommodated along with the opportunities for exports that we currently have. So I think that the future is looking great for the upstream sector in Nigeria, especially also we are seeing a lot of Nigerian companies coming into play, participating in the upstream sectors, especially with the recent acquisition of 20% stake in Seplat by Hairs Energy. So, and we have also seen other consolidation by the local players in the industry. And there are so many reasons to that, and how like these are expected to shape the performance performance and opportunity within the upstream sector in Nigeria.
So one of the outstanding things we saw last year was, Dangote as a price influencer, but we had a lot of price changes. So I think it was last week I had the opportunity to speak with the MD of Dangote Refinery and asked if we could expect a more stable pricing in 2026. And one thing he said to me was, well, we know that it is largely connected to global crude prices, but if we could have more supply of crude from the local front, from home, it might bring a bit of stability. Do you see us achieving that in 2026?
Yes, I think the opportunity to grow supply locally definitely boosts the performance locally in terms of accessibility of supplies to the local producers, local refiners, and depends on if we are interested in how, like, the presence of these, our capacity locally now to refine crude, especially with the Dangote refinery, and also meet the demand for PMS, which is the dominant oil products that we consume locally. So I think that these local opportunities, depending on what the government wants to achieve, right? Are you trying to improve, like, if the strategy is you want to boost industrialization, now you want to make the cost of energy cheaper, or if the strategy is you want to increase the inflow of forex, right? So because if the strategy is purely, boosting industrialization, so you're looking at how to make the cost of energy cost effective so that you can, local producers can actually take advantage of that, right? So, but you could also be looking at both gaining on the forex end and also boosting industrialization locally, where you can find opportunities of how do we make sure that we provide sufficient supplies of feedstock to these refiners so that we are meeting local demand for refined products, in addition to potentially exporting any excess supply that's coming from them, which would be a source of foreign exchange to the country. And in addition to the effects that you also get from selling, exporting what the additional volumes that are not consumed locally actually brings into the country. So the combination of increasing your supply base and also having these robust refining capacity locally. So all this should be I think the approach of government should be one that's actually informed by what the objective, what the end goal is, right? You know, where are we intending to? What are we intending to achieve? What are the outcomes we are looking for? So you could also imagine situations where, although you don't have subsidy already, or now we have removed subsidy from refined products, but you could also be providing the feedstock to local refiners based on naira, for instance, right? And then you see the effect of the exchange rate there, right? If you're just going to be selling crude on naira, or if you're going to be selling crude on dollar, based on dollar, right? So you see, if you have a stable FX, then you have the option to maybe the government, so what we call upstream subsidy, right? So whereby maybe the government can decide to peg the price at which these crude is supplied to local refiners, for instance, or it can decide to also sell based on what the international price is, right? So, but I think where I'm going with this is, at the end of the day, the approach that's adopted should be informed by the outcome that we want to achieve. And that is very essential. I believe like a lot of what is currently going on in the industry now, we are seeing the gains in terms of like the stability we are seeing with the foreign exchange, the exchange rate currently, which has been stable for the past couple of months. And I think we see that evolving, and potentially if we have that consistency going forward, that would be beneficial from many fronts.
Much for all that explanation, Dr. Miozo, founder of Proctem. Thank you for your perspective and joining us on the program this morning.
Thank you.
Okay, now let's take a break. When we come back, the NCC seems to be in favor of cheaper rates for consumers. We'll talk about that after the break. Please stay with us. Welcome back to Watching Business Morning here on Channels Television. Report indicates that the national broadband penetration in Nigeria is just about 50%. 33 million Nigerians are completely unconnected, leaving 61% of rural residents offline. It could be that the NCC, the Nigerian Communications Commission, seeks to solve this problem by adding new internet service providers. So we hear it's about 6 or 7 have now been added. Well, competition should be good for consumers, but will it improve service, and can it really bring to cheaper rates? Let's discuss this morning with Engineer Gbenga Adebayo. He's the chairman of the Association of Licensed Telecommunications Operators of Nigeria, ALTON. He's also the founder of African Broadband Limited. Engineer, thank you so much. Good morning and welcome to the program.
Good morning and thank you for having me.
So I guess consumers should be rejoicing now, but you know, there's just this thing in Nigeria that you don't expect prices to just go down just like that, except you fight for it, especially when you look at overhead cost for whoever whether it's a local company or an international company, once you're operating in Nigeria, the issue of infrastructure, overhead costs, always feeds and deprives consumers from getting a decline in prices.
Thank you. But I think we have a different situation in our hands. I say so because during this time last year, we were talking about industry sustainability, and we made a lot of effort in doing some form of adjustment in the tariff that we charge to subscribers. And this year now, the regulator has made it clear to us that quality of services has to come first, among other things. So it's assumed that during last year, we have addressed capacity gaps, we have addressed issues affecting quality of services. And this year is now time for consumers to begin to see the benefit of the work that we have done and to get values for the money that they pay. NCC has made it very clear to us that consumer experience remains first and top line. So therefore, we have not only regulatory obligation to our regulator, we do have also the moral obligation to subscribers to provide them quality services for what they pay for. So I think in our case, as I said in the beginning, we are in a better situation because this time last year, a lot of investment has been done in the system. For now, various networks, we have done significant expansion. And now it's time for us to start delivering value to subscribers. So I think that we are in a better place. And going forward, we are no longer going to be rewarded for the effort we have made. We are only going to be rewarded for the successes that we achieve. In that regard, regulator has set very strict parameters for quality management, and for quality experience, for quality of user experience. We're out, our sleeves are up, we're out to deliver that to all subscribers wherever they are. In terms of coverage gap, a lot is also being done in closing the gaps. You are aware about the 90,000 kilometers fiber that the federal government is doing. You have also mentioned in your introduction a number of other players that have been licensed to close the gap. And on our side also, as legacy operators, we're also doing a lot in terms of closing those access gaps because the more we are, the better for everyone. So I think we're in a better place and the consumers stand in a better position now to enjoy better quality of service that they have done in their experience in years past.
Engineer, just as you mentioned the issue of quality of service, I don't know if you've heard the report, but I seem to hear that people around me, there are more issues or incidents of drop calls and network failure in the last, I think, 2 weeks or so. I don't know if you've heard that.
That's why we always say to people, report your experience. It's not enough to post on social media what experience you have. There are channels for reporting this kind of complaint and experience. But you know, it's a bit difficult if we have a generalized report to say quality of service or drop calls are like this. We operate networks and there are clear reports about service delivery, service availability. So I'll always advise that people should please report their experience instead of going on the comfort of social media to post what they see or what they experience. People should actually address those concerns directly to their service providers. We're not unaware that there could be hiccups here and there, but again, it doesn't happen at all place and at all times. So my appeal to the public is that when you do have those experiences, please pursue the channel of complaint, whether by way of using the touch points of the operator, or by way of a call to the center, or by way of complaint to the regulator. Then we're able to look at it on case-by-case basis. And that also helps us to narrow down as what exactly is the situation and where does that happen. So I cannot say to you that it doesn't happen. But what I can only say is that we need to get the right report to be able to know what to do and how to address those complaints when they arise.
So, I mean, I guess customers or consumers are supposed to report to the carriers, you know, whoever is their carrier, or maybe how do they exactly, what's the most effective way to report issues like this?
There are three channels of reporting. In the first instance, you can call your operator's help desk. And the assurance to the public is that each of those calls that you make to the service center, to the experience center, is being recorded and is being monitored. That is the first point. The second is also have a digital access point where you can complain using the operator's app or contacting them even on social media platform. They do have social media handles on which you can reach them. And the third is even of those space. The NCC also do have a customer complaint center where you can dial into those numbers and make complaints and report to your own service provider, to the regulator. So people should consider pursuing any of these channels other than just making a generalized post on the internet or on the social media saying service is bad, service is bad, service is awful. It helps us to actually identify where the problems are when those reports are made.
All right. Then this new entrance into the telecom space in Nigeria, we hear they come on different modalities, different forms, voice over data, and all of that. Could you help us understand, some of these modalities and perhaps individuals who would prefer to hop on some of those platforms?
About 2 years ago, the NCC licensed what we call the Mobile Virtual Network Operator. They call them the MVNOs. Those are players that will latch on the traditional players to provide services. And also they license the wireless providers, the likes of Starlink. Now we're hearing about a few other players that have been licensed to provide services. So the option would be traditional conventional connection using your mobile, or home connection over fiber, or radio connection via the satellite, such as the Starlinks and the rest of them that we currently have, more of whom we are also going to get on the network. But the beauty of that for consumer is that it gives options of where to go. And you see, the more competitors we have in the sector, the better for the consumers, because it gives them options. So if operator A is not delivering services, you go to operator B. If operator B is not, you go to operator C. So for us, we say always that the better the better. And experience tells us that when you have new entrants into the business, it does help the traditional players to do better. So we're happy that more players are coming on board. We operate one national network. I say all the time that you could have 6, 7, 8, 9, 10 players in the sector, but we all operate just one national network. And our overall experience at industry association is to ensure that users get service and value for the service they pay for. So the more we are, the better. So long as we can have services to all persons in all places at all times, we're happy as an industry association. So our role as an advocacy group is to ensure that we have everybody doing what they should do, and the consumers are happy getting the kind of experience that they pay for. We do have that obligation to consumers. We have that obligation to government. And we have that obligation to ourselves as well, to be seen as doing what is right, what is good for the public that we serve.
And, your obligation only increases with more players there. But I guess all of this is also a part of what the NCC is saying when they said they've rolled out satellite-to-phone technology for 23.3 million Nigerians. I guess it's captured in some of these, by some of these new entrants.
Absolutely so.
All right, so we'll be watching that space and hope that things will only get better service and better rates for consumers. Well, thank you so much, Engineer Benga Adebayo, Chairman of Association of Licensed Telecommunications Operators of Nigeria, for your time and views on the program.
Thank you for having me.
All right, now, the Central Bank of Nigeria is asking banks and payment service providers to strengthen their fraud-fighting systems and commit to measurable reductions in electronic fraud. And of course, this concerns your money, and so it's an important conversation. We have that report now by Ladi Williams.
Nigeria, working through the Nigeria Electronic Fraud Forum, says the time has come for a more aggressive and coordinated defense against digital fraud, which has grown both in volume and sophistication in recent years. In her opening remarks, Dr. Rekia Yusuf, Director of Payment, System Supervision, and Chairman of NEF, stressed that the collaboration among regulators, financial institutions, and tech partners remains critical.
Over this past decade, NEF has provided a trusted platform through which regulators and industry stakeholders have jointly strengthened the resilience, security, and credibility of Nigerian payment system. Through this sustained collaboration among financial institutions, payment service providers, infrastructure operators, identity management agencies.
As transaction volumes rise due to increased business activity, fraudsters keep looking for loopholes to exploit. Represented by Ibrahim Umar Hassan, Director of Development and Finance Institution Supervision, Deputy Governor Philip Ikeazo said the new strategy aims to cut industry response times to suspected fraud to under 30 minutes.
Contributing to landmark legal reforms such as the Cyber Crimes Prohibition Act of 2015, promoting consumer awareness, proactively engaging on new technologies and fraud typologies. Collectively, these efforts have delivered a more resilient, coordinated, and fraud-aware payments ecosystem, providing a strong foundation for the forum's 2026 objective of achieving measurable reduction in fraud through the adoption of ISO 20022 and strengthening national identity management.
Highlighting the gains recorded so far, Managing Director and CEO of NIBS, Mr. Premier Oiwo, said electronic payment fraud losses declined significantly in 2025.
The overview of the industry fraud in the last 5 years is displayed here. You can see a gradual trend of the fraud within the last 5 years in terms of count. It went down significantly, well, not significantly, but about 4% in 2025.
Stakeholders in Nigeria's payment sector laud recent gains against fraud, but call for more engagement.
Maybe nobody can stop fraud, but we can minimize fraud. And so some of the outcome of the conversations that we're having has brought us to where we are today. This year, as a result of last year's reports, we found out that fraud is actually dropping. Maybe not the amount, but the rate is dropping compared to the growth of the industry, which is an interesting statistic.
We are emphasizing the fact that there is need for us to be ethical in our transactions and everything, and we are building the kind of bankers that we believe who are going into the industry now, who are conscious of their pivotal role, as an ethical being and as a banker, as a professional, so that when they are on board, they will be able to do things transparently.
The CBN says with clear targets, shared responsibility, and sustained cooperation, 2026 could mark a turning point in the nation's fight against e-fraud, protecting consumers and strengthening confidence in Nigeria's digital financial ecosystem.
Right, it's time to go global now. Willie Bong has the stories. Will?
Definitely. Let's kick off with Wall Street's performance on Wednesday following Donald Trump's speech at the World Economic Forum in Davos. So do we have a tackle trade after the reversal of tariffs on Europe? Yes, Maria Bird.
The U.S. stock market spiked on Wednesday as the U.S. president spoke before world leaders at the World Economic Forum, providing insight into the U.S. economy, stating that the U.S. is strong and that it's showing great signs of growth. After the meeting, the president also met with NATO secretary and clearly outlined his interest in Greenland. There was a framework developed that he announced on Truth Social as he's hopeful that this could be the beginning of the U.S. having great interest in Greenland. The U.S. economy, though, is showing some signs of upward ticking as the Dow Jones was up at 1.21%. The S&P 500 showed growth at 1.16%, and the heavy tech NASDAQ was up at 1.18%. As many investors are continuing to watch what will happen over the next few days and weeks ahead.
Thank you, Maria. We'll continue to watch. And stocks now in Europe are opening higher after U.S. President Donald Trump announced the framework deal on Greenland and said it would no longer impose higher tariffs on European allies. Markets are seen kicking off today higher. Trump said the deal could involve defense cooperation and access to Greenland's mineral resources. And the European Union has, however, frozen approval of its trade deal with the United States after concerns over President Donald Trump's threats to seize Greenland. The European Parliament's Trade Committee has postponed the ratification vote indefinitely, raising fresh doubts about the future of the agreement. And the move underscores growing political tension between Brussels and Washington despite earlier progress on the trade pact. Meanwhile, President Donald Trump says a framework agreement reached with NATO on Greenland includes access to mineral rights for the U.S. and its European allies, alongside cooperation on the Golden Dome missile defense system. Now, speaking at the World Economic Forum in Davos, Trump ruled out using force to acquire Greenland and said talks on the island's status should begin immediately, adding that the deal would last forever and would also ease tariff tensions with Europe. Now, Greenland holds some of the world's largest rare earth reserves, a key focus of Trump's strategy to cut U.S. reliance on China, though the proposal has sparked concern about potential strains within the NATO alliance. Now, UK government borrowing fell more than forecast in December, offering some relief to Chancellor Rachel Reeves as she works to rein in public finances. Now, the budget deficit stood at £11.6 billion, £7.1 billion lower than a year earlier, and well below economists' expectations of £13 billion. Now, the Office for National Statistics also revised November's borrowing down by nearly £1 billion, further improving the fiscal outlook of the country. Now, South Korea's economy slowed more than expected in the fourth quarter, growing 1.5% year-on-year, below forecast of 1.9% as weakness in construction and exports offset modest consumer spending. On a quarterly basis, GDP contracted 0.3%, the sharpest slowdown since late 2022. Now, construction investment fell 3.9%, exports dropped 2.1%, and manufacturing output weakened despite small gains in private consumption and government spending. For 2025, the economy grew just 1%, the slowest pace since the pandemic, with fresh uncertainty from renewed U.S. tariff threats on AI chips, even as semiconductor exports remained a key bright spot. Japan's export growth slowed to 5.1% in December, below expectations as shipments to the U.S. plunged 11.1% despite stronger demand from Asia. Exports to China rose 5.6%, while shipments to Hong Kong surged 31.1%, and exports to the wider Asian region climbed 10.2%, helping to offset weakness in the U.S. market. And for 2025, exports grew 3.1%, down from 6.2% in 2024, with analysts warning that U.S. tariffs, rising competition, and fresh trade tensions with China pose growing risk to Japan's export outlook. Up next, Malaysia's central bank has kept interest rates unchanged, citing a resilient economy and stronger than expected growth despite global tariff risk. Bank Negara Malaysia held the overnight policy rate at 2.75%, a move widely expected by economists, saying the current policy stance remains supportive of economic activity. Now, inflation has stayed muted, allowing the central bank to maintain its cautious approach after cutting rates only once in the past 5 years. Now, OpenAI is in talks with Middle East sovereign wealth funds as it seeks fresh investment for a multi-billion-dollar funding round expected to total about $50 billion, according to sources. Now, CEO Sam Altman is in the United Arab Emirates for the discussions, with the funding round expected to close in the first quarter, though terms are yet to be finalized. The AI firm behind ChatGPT has seen rapid growth and soaring valuations after closing a $40 billion funding round last year and lifting its valuation to $500 billion following a major share sale. And that's the Global News Brief today.
Thank you so much, Will. And just before we leave the program, we take you to the market. Nigeria's equities market this morning is in the green slightly, so 0.04% is where we see the oil share, 166,334.22. So it's still trending forward in the green territory. So slight, we don't know what will happen by intraday, but I believe Ladi Williams will have the latest numbers by Business Incorporated to tell you what the market sentiment would be at that time. And that's it for Business Morning today. Thank you so much for being a part of it. I'm Ini John Mekwa. Do have a great day.